It's often said that men are from Mars and women are from Venus. But when it comes to their finances, are men and women all that different? I'm Andrea Heng, and this is the Money Talks podcast. Today, we'll be talking about whether men and women behave all that differently when handling their money. And to help us break down the psychology of the gender gap in finances, we have with us Professor Carmen Shih from SUSS. Professor Carmen, it's good to have you in the show today.
Hi, Andrea. Thanks for having me.
Right. So, very interesting topic. So, let's start with the big picture. In your own research and your own observations, do you find that men and women actually do view money differently?
Research have shown that men and women do to some extent view money differently, although these are just broad trends that reflect average behavior, right? So one study that looks at money attitudes, they actually find that men tend to associate money with power, status, and achievement, whereas women tends to focus on saving, budgeting, and how to manage money more wisely.
Okay.
But the study also suggests that, besides this gender difference, there are also other factors that comes into play, like, social conditioning, upbringing.
Yes.
Because male are often expected to be breadwinners in the household, and women tends to be the one that's managing household finances. So they will tend to have a different view of how to manage money over time. And also factors like your education, experience, and your environment would also, play a part in influencing how people think about money.
Yeah.
One area where, there is some gendered financial behavior is in terms of savings. So the research finds that men and women tends to have different saving goals. In particular, men in couples, they tend to have higher and more ambitious saving goals.
Okay.
And the reason that's put forth by the researcher was that they are in charge of the long-term well-being of the household, right? So they take a more long-term perspective. So they are more ambitious in terms of saving goals.
Okay.
Then women in couples, okay, they are the one that are managing daily expenses. So they tend to have a lower saving goals. Like what they are concerned about is, today's expenses. Whereas male, on the other hand, they are more concerned about future returns, like growing their returns.
Right.
So you can see in terms of the savings goal, there is already a difference.
Okay. So when it comes to risk, financial risk, men and women certainly behave differently too there, right?
Yes. In fact, research have documented that there is like a difference between how men and women approach financial risks. Okay, so there's this study where the researcher, what they did was they conducted an experiment. So instead of asking participants, are you risk-taking or are you risk-averse? So what they do was they actually observe the financial decisions made by the participants when real money was involved.
Okay.
So in the experiment, the participants were given a sum of money, say, for example, $100. And then they were given the choice. You can keep it safely or you can invest it in a risky option.
Okay.
And then in that risky investment, there's a chance of losing the money.
Okay.
And there is also a chance of generating a higher payout.
Okay.
And what the researcher found was that men, on average, invested more.
Okay.
So what the researchers conclude is that on average, women tends to be more financially risk adverse.
And they're quite conservative. They're a bit more careful in that sense, right? But is it just down to biology? I mean, it's very easy for us to just say, oh, men are different from women. But what is the actual why? It can't be just because, a man looks different from a woman and therefore we think differently. There must be more to it than this, right?
Now, one possible explanation comes from biology, like, how hormones are natural chemicals in the body. They regulate their mood, emotion, and behavior. And so some study vaguely link it to traits like risk-taking, competitiveness, and financial decision-making under uncertainty. But, this biological explanation alone is not strong and it's not complete because other factors such as like culture, your social condition, your upbringing, and how you're educated all play a part in explaining the difference.
Okay, interesting. Now let's talk about the stock market, right? Is there any distinction between a typical man's investing habits versus how an average woman would invest?
In fact, research have documented a difference. So in a very influential paper, what they examined, like they look at 35,000 brokerage accounts, male and female investors. And they found that male investors tend to trade more often. And the kind of stocks that they hold are riskier compared to women.
Right.
Female investors, they tend to hold stocks that are less risky and they do not trade as much as males.
Right.
And the researchers attribute this difference to men being overconfident.
Okay.
When you think that you know more about the market, right? You want to prove that your judgment is correct. They tend to trade more.
Right. So that's very similar to what you said earlier about women being a bit more risk averse and conservative. And it shows in the way that they invest as well in the stock market, right?
Yes.
So some studies suggest that women investors actually end up outperforming their male counterparts because they trade less frequently, they take fewer risks, they are less impulsive. Perhaps that lack of confidence actually helps women outperform in the long run, right? Is there evidence for that?
Yes, indeed, there's evidence.
Okay.
So the research finds that men, on average, trade 45% more than females.
45%?
Yes, that's a lot.
Wow.
When you trade frequently, you incur transaction costs.
That's right.
That will eat into your return.
Yeah.
And, the timing, like if you are able to time the market, then of course your returns will be high. But like in the event, how we mentioned about men being overconfident.
Yeah.
And then if, their judgment wasn't sound, like, they didn't time the market as good, then of course the returns will be lower.
Right.
And in fact, the studies shows that men trade more often, but the average returns, they earn less than women.
Okay.
So actually being more conservative, more risk-averse actually, earns more return.
Okay. So that's a win for the ladies.
Yeah.
Okay, so when it comes to the household situation, so you're married, you're a couple, or you live together, you have joint expenses together, etc., right? So how do the financial roles, the different financial roles between men and women typically play out?
Okay. It is efficient to, separate, responsibilities, okay? But it also creates blind spots in the sense that, one party is concerned about today's expenses, the other party is about future return.
And that's where the tension happens.
Yes. So if one side only see part of the full financial picture, right, that could lead to differences in priorities and misunderstandings, right? So overall, right, I feel that the main blind spot is a lack of shared awareness. So if, both parties can communicate more effectively so that, they both see the full financial picture, then that would reduce the amount of blind spots and, even if, the responsibilities are split.
I think it's working towards a shared goal and also making sure that, okay, I trust you to cover this and you can trust me to cover that, and it comes together as a full shared picture, right? Okay. Are younger generations blurring the lines between the typical behaviors that each gender tends to hold up to? Because like you said, right, we've been talking about a very clear difference between men and women and their roles, their upbringing, and how eventually and ultimately this influences how they handle money. Are younger generations doing it differently?
Okay, so what the research, what the previous research do, right, is as you can see, it's a very traditional, like male is the breadwinner and female is the one that take care of the household.
Yeah.
But, the demographics have changed, right? Yeah. There's an increasing number of people that choose to be single.
Yes.
With the new generation, they would have they are brought up in a different way. So for example, early exposure would also, have an impact on their financial behavior. So, for example, if you are, exposed to money concepts, economics, and investing, they find that you're more likely to invest in the future. Yeah.
Yeah, I do notice that obviously the younger generation a lot more savvy when it comes to money, both the guys and the girls. And that strikes me because it's quite a shift in the generational behaviors towards money, right? What's driving this shift?
Okay. One important factor is the information that we have, right? So you can see that there's a lot, like even if you don't know anything, you can just Google.
Yeah.
And there are also a lot of online courses where you can pick up basic financial knowledge and also, seminars and webinars that, individuals can take. But all these resources were not available, in the previous generation.
Yeah.
So that would also play a part in, creating this blurring line.
Yeah, I absolutely agree. We tend to forget because we are from a previous generation and we tend to forget, okay, we know this now, but the younger people are knowing this at a much younger age than when we were because access to information is just so vast for them right now, right? So how can we all then make better financial decisions?
So both approaches have their strengths and weaknesses, right? If you're overconfident, you tend to trade more, right? Even leading to over trading. But if you are too excessively cautious, you underinvest and you could have missed investment opportunities.
That's right.
In order to make better money decisions, I would think that combining the strengths of both. Okay, so you have to be confident, but not overconfident. You have to be cautious, but not being, excessively risk adverse. Yeah, and in order to better make more sound decisions, right? You should base the decisions on information, your goals, rather than emotions and assumptions.
Right.
Yes.
Very interesting conversation that we've just had about the key differences and how those lines are increasingly being blurred, especially as women, especially women in Singapore, in modern society, we're more career-minded and we also have our own goals and ambitions to reach for, and they can be as confident as the men sometimes as well. So that's very interesting take. And I think also the men, being a bit more aware, more informed before exercising their decisions, that's a good takeaway as well. Thank you so much for providing this, Professor Carmen there. And thank you to our Money Talks community as well. I have a question that I want to leave you with now. When it comes to money, do you find yourself falling into the typical stereotypes of your gender, or are you the exception? Because I think I sit somewhere in the middle. I have my man-like decision-making days, and then I have my woman-like decisions when it comes to finances. Please don't tell my husband how much I shopped this month. That's it for the Money Talks podcast. If you have any comments or answers to this question, you can leave them in the comment section wherever you are listening to us from. You can also email us directly at cnapodcasts@mediacorp.com.sg. This is the Money Talks podcast. I'm Andrea Heng.